look at the chart of TAL Education Group. This is a stock that has been hammered after China basically banned an $100 billion industry with a snap of its fingers. We're going to be talking about whether or not TAL Education Group and other companies within the for-profit tutoring space are buys after being beaten down like an absolute stray dog, going from highs of $90 all the way to $6. Is TAL Education Group and other Chinese stocks a buy right now? So welcome back to another video. This stock has caught my attention and evidently many other people's attention. If you look at Google Trends and you look at just TAL stock, which is just one of the stocks out there, we can see tremendously rising interest in the search term TAL stock over the past week. All right, and it's the highest it's ever been over the past 12 months. So that is very, very interesting to see. And I mean, for a good reason. When you have a stock drop this drastically, it dropped by 75% in one day. Yeah, people are going to have some questions, right? And I mean, of course, with anything, there's a bear side and a bull side to it. And this Bloomberg article basically offers the bear sentiment. We do not see a buy the dip opportunity. China's recent regulatory crackdowns are the beginning and not the end of increased control and command by Chinese leaders, said the CEO of New Constructs, an investment research firm based in Nashville. And here we can see the crackdown crunch gauge of US-listed Chinese stocks sinks nearly 50% since February record. And that's the most we've seen ever in Chinese stocks, ever. The biggest slump, okay, since February. So that's pretty concerning. This doesn't even compare to what we've seen in 2008. And as a big investor in Alibaba, I actually threw about $100 into TAL Education Group, but my main investments, I have over like $3,000 or $4,000 of my money put in Alibaba. This is of course concerning, but it just makes this article doesn't necessarily change my stance on Alibaba. I'm not selling my assets. I think that it is a buy the dip opportunity, maybe not in TAL, but definitely in Alibaba and other Chinese stocks. And even if you are very you're willing to take a big risk, yeah, sure, invest in TAL as well. Again, I put $100 basically as gambling money. It could go one way or another, which we're going to discuss the bull side in a bit. So markets across China slumped on Tuesdays as rumors circulated that US funds were dumping Chinese and Hong Kong assets. If you look at a big company, ARK Invest, they dumped their share. They don't have any shares of TAL, but they dumped their shares of Baidu and Alibaba and other Chinese companies following this news. So shares of TAL, whatever, they actually rebounded by about 16% after the 70% fall. But I mean, despite this rebound, they're still 90% down over the year. I think this is kind of a dead cat bounce, said Matt Maley, chief market strategist for Miller Tabak and Company. It's way too early to be catching the falling knife. If you're confused what that means, basically a falling knife is deciding to buy a stock. Let's say you saw this, 40% drop in the stock. Oh, you're like, oh, it's a steal at $52. Well, if you bought it then, you would have just been catching a falling knife because it decreased by another 88%. And a dead cat bounce basically means, if you look at the 5-day chart, it's actually up 44% over the past 5 days. So if you bought it at its lows at $4.20, whew, you would have been doing pretty well. So anyways, basically what this means, a dead cat bounce, is, yeah, it goes to $4. It bounces back up by 45%, but then it it just keeps dropping. So basically, it goes down, it goes back up, but the overall trajectory is down. So it could be, $3 or $4 in the span of a month. So that's a dead cat bounce. And On the other hand, this is part of the bull side, and this is, of course, from people who are probably not as qualified as the people making the bearish sentiment. But basically, buy the dip, says CEO of Cullen Investment Group. There's a little bit of overreaction, a little bit, that's sarcastic, I think, by investors in terms of hearing the news from China, like, oh, they want them to become nonprofits. That won't happen. I honestly think it will happen, but I think the resiliency of Chinese companies, of these education companies, are being grossly underestimated, and I think that these companies will adapt very soon to the new regulatory requirements, as we'll see in a second, and this is just like going to be my expectations. So a massive amount of bankruptcies among smaller after-school tutoring companies as a result of the new rules. The exit of 70% of such firms would consolidate the industry in favor of TAL and New Oriental, et cetera, et cetera. New venture capital-backed competitors will also change their business scope and exit. Online tutoring leader TAL in particular will report very strong net profit growth from now on, she wrote. Well, unfortunately for them, TAL is actually, they canceled their scheduled earnings release and earnings call in light of the situation. So a leading K-12 after-school tutoring service provider. I mean, one possible market is that they do university tutoring. And again, part of the bullish sentiment is that they just banned core school subjects. So what's not a core school subject? I don't know, potentially art or maybe English. I have no idea. So in those non-core subjects, TAL could still operate as a for-profit company, as well as anything outside K-12. So again, that's just part of the bullish sentiment I have, and that's again why I threw in a couple bucks in there. In light of the recent regulatory developments, it will cancel the earnings release for the first quarter of fiscal year 2022, as well as the corresponding earnings conference call and live webcast previously scheduled at 8 a.m. Eastern time. So let's see what happens. They cancel their earnings call. They probably have to take a bit of a step back to consolidate everything before coming out to investors and how it will impact their business in general. But again, more bullish sentiment that not only could consolidation now happen, which would be potentially good for the businesses, that the CEO of the company has been in this game for over 18 years and he knows what he's doing. And a wise investor once said, buy when there is blood in the streets. Longs are going to make a pile of money. They have no financial distress. I will add that this company has around 8 billion in assets versus debt of around 3 billion. So at the end of the day, this company is worth more than what the current market cap is, which is 3.91 billion. They have way more assets than liabilities, and if you subtract that, it goes up to around like $5 or $6 billion. I did the calculation in my previous video. If you'd like to check that out, I did 2 or 3 videos on TAL Education Group. So when you're looking at TAL, ignore the fear, uncertainty, and doubt. Block the haters and let's go. Let's see what happens. I think it could go either way. This could be a potentially dead cat bounce, but it's up by 44%, even though it's still down 92% over the year, which is ridiculous. But if it keeps going this way, you could earn a little bit of money and just get out. Let's just see what happens. Let me know down in the comments which side you're in. Beijing, part of the increase of the 44% increase was that Beijing seeks to ease fears on Wall Street after tech crackdown. So shares in Tencent jumped 8.4% following the news that Chinese regulators had sought to reassure global banks after Beijing in effect banned the 100 billion private tutoring market. So that's very, very funny. The call sought to reassure the groups after China issued an effective ban, and part of these projects were BlackRock, Fidelity, Goldman Sachs, and JP Morgan. And we can see this nice little bounce back in shares of Alibaba, Tencent, and Meishin. I think for education stocks, it's a bit of a different story. We'll just have to see how this plays out and how well they adopt with these new set of regulations. But if they're a strong company with pretty good fundamentals, I think they will be able to bounce back. Again, we'll just have to see how everything plays out. And again, I'm a pretty big investor in Alibaba. Over the past year, of course, down 24%. I mean, that's not really nice to look at, but I'm in it for the long term. You look at the way that the revenue is going up tremendously, okay? They tripled their revenue in the past 4 years. Their income, their bottom line is growing tremendously. They're increasing their share buyback program, right? So I mean, I think a lot of in the past month, this has been due to sympathy trading. Basically, as one Chinese stock falls, the rest of them fall. All right, even big dogs like Alibaba. But you look at the price to earnings ratio, forward PE is less than 20. They're growing 30% plus per year. These are just ridiculous numbers here. Like, come on, like, you'd be, I think, a fool not to invest in Alibaba right now. And even Baidu shares are down by 16% over the past month. Whew, what? A price to earnings, not even trailing price to earnings of 7. This is the Google of China. And you're having a price to earnings ratio of 7? Oh my goodness, give me a break, guys. And Tencent, they actually blocked something to do with their music. It's down by 12% over the past year. Over the past 6 months, it's down by 34%. I don't have any shares of Tencent, but this looks like a decent buying opportunity right now. So let me know what you think. I'd appreciate a like and a subscribe to the channel if you haven't already, for more content like this, as well as check out down the links, for example, my Discord group right here, totally free. It's a really good resource, really good people in here. And if you'd like to support the channel, you can do so in many ways. Just check out the links down below from my description in the video. So peace, take care, love you all, and I'll see you in the next one.